Good morning, traders. Today is Monday, June 27th. My name is Charles, and this is the Pirate Traders live stream. Welcome, welcome one, and welcome all. 74 people hanging out. Please smash that like button. I sure would appreciate it. All right, well, let's talk about the market and what we expect for today. Well, first and foremost, I'll just start off by saying I'm pretty bullish this morning. So I'm going to take a second to make the bullish case here, but I want to preface it by reminding you all that we are in a bear market and that the larger momentum of the market is still to the downside. So I only see this bullishness right now as a short covering rally, as basically a like a bear market rally. I don't necessarily see this as like a low and now the market is heading back to all-time highs. Not at all. Okay, but as of today, we're day traders, so we really only need to worry about what's going to happen over the next 7 hours. And as of today, I feel bullish. Okay, and I'll tell you why. Because last week we had a balancing area down here where the market was trading around in a range. And on Friday, we broke out of that range with momentum. We had a gap up, and then the day traded with a gap and go that just continued higher. We got a P-shaped profile, which told us that it was short covering more so than new money buying that was taking place. And then at the end of the day, we had a spike up in the M period. And that is what got me bullish right there, is that spike up at the end of the day, because that's a signal. That's the market waving at us. Hey, hello, we still have momentum. The momentum is not over. The breakout of balance leads to excess. And so that spike up on Friday made me feel like maybe we need some more excess to the upside. Maybe this momentum isn't over, right? So then I log in this morning, open up the charts, and what do I find but a gap up as well? What is a gap up? A sign of momentum. So I believe that it's probably more short covering than new money buying, but the buyers are in control of the market. So the first order of business for this morning will be filling the gap. So trading back down to yesterday's high, which is at 39.1950. That is the first move I'm looking for the market to do. If they find support around yesterday's high and then turn around and start heading back up, that is a gap and go, which is bullish for continuation to the upside. Also, if they find support anywhere inside the gap, so if they start trading lower and they don't quite get to yesterday's high and they turn around and head higher, that is also a gap and go, which is bullish. And if you want to know what I'm talking about, just look at Friday. That's a gap and go. Market opened with a gap, made no attempt to fill it at all, immediately started to head higher, and we were bullish for the day, right? So a gap and go is a sign of momentum. The spike is a sign of momentum. So if we get either of those, my assumption is more momentum. And then the target to the upside is filling the gap up to 40.14. Okay. If the market pulls down to yesterday's high and it does not find support there, okay, if the market pulls down and it can't find support and it starts to pull back down into yesterday's range, that is a signal that the momentum is coming to an end. Okay, and that we need a pullback. So with that signal, I start to recognize that we have left a lot of weakness behind. On Friday, we left 3-week references and a set of single prints that need backfilling, as well as a gap. That's a ton of weakness that needs to be repaired. And then you've also got the weakness here. All right, so the market is open. First order of business is the gap fill. Long story short, if we do pull down into yesterday's range and we break the base of the spike here at 38.99, so if we pull back down, don't find support here, start to trade lower, if we break the base of the spike, I'll be short for attempt to go fill that gap we left behind on Friday. And just monitoring for continuation at each week reference. Where do we find support? But anyway, we'll worry about that later. First order of business, can they fill the gap? Once again, if you have not hit that thumbs up button, I sure would appreciate it. Help me out here on this Monday morning to get some new peeps on the streets. So obviously they're going for the gap fill here. So now the question is, can they find support above yesterday's high, or at least right around yesterday's high? Can we keep this momentum in the market? Oh, I also wanted to show the daily, just so you guys see where the larger potential resistance is above. Hold on, let's watch the gap fill first. Okay, so that is the gap filled. Still have a lot of overnight inventory that needs to be absorbed. Okay, buyers are defending. But yeah, this is the larger downtrend on the daily that I'm looking at. If I just zoom out here a little bit, you can see. That's how I have it drawn. And so I would expect that we would get some resistance up there when we head up and push up into that if we do get a gap and go today. All right, well, we're starting to push into the range, and we're starting to push below the zero line. So this should give us a good clue of whether the buyers are going to remain in charge this morning. Obviously, if the market continues to push below the zero line and continues to stay below or stay inside yesterday's range, that would be a little less bullish. Looking to test the base of the spike for support. And it looks like that's what we're getting. All right. So it's not bearish yet unless we don't find support at the base of the spike, but I am looking to pull back down and test that around 38.9850. So you could say bearish on a very, very, very short term. Cyrus, good morning to you. Jeremy Jones is here. Welcome. Scooball, T-Wark, Courtman, Michael, Caffeine, Lamus. Welcome back, Lamus. The Shaw, Luca, Philip, Blue Shirt, Rev, Laser Eye, J Trader in the house. Haley Carr, welcome to you. Can you look at VRM? I don't look at individual stocks usually during the first hour just because I'm just too busy focused on the indice. But if you're a member of the brigade, ask me again during the private stream and we'll take a look. MW, hello to you. T-Bay, good morning. Jack Spratt, good morning to you. Daniel, hello, hello. Elliot, good morning. Chirp is here. Anita, Arthur, John Lash, and Josh, welcome. Patrick, good morning to you. It also looks like the base of the spike, which is at 38.9850, and we're looking for potential support there. We'll line up nicely with that 20 moving average on the 15-minute candles for the SPX there. That is also a potential area for support. And it's worth noting that we've got a couple levels here with only like 150 contracts. I generally like to see 200. This is not something to get too obsessed with. But if we were to come down here and find support and start heading higher, that can become a target to try to come back up and backfill that and look for resistance at the halfback. That is after testing the support on the spike. Seven-mile reach. NQ passed through the previous day's high. Oh, no. M period above B, actually. No, so they're testing the base of the spike literally right now. That is the support that you're getting right here at 12.086. If that breaks, I am bearish on the NQ to start repairing some of the weakness left behind. NQ not quite as weak as the ES, but still lots of weakness there. Scubo, I would say there are new sellers pushing it lower. I don't know about that. No, it's short covering. I mean, sorry, it's long liquidation. It's the overnight inventory. They didn't get the gap and go, so now they got to get out of their trades. Exiting a long trade is the same as going short. It's a negative pressure against the market. So I actually think this is more just liquidating the overnight, looking for support. NQ found support before even touching its 20 moving average. So we should find some support there when it tests it. So you're sitting there and you're saying to yourself, Charles, what's the deal with this spike, the base of the spike? Why do you care about this level? Well, the base of the spike is the beginning of the new momentum. That's where the signal came from the market that we were done rotating yesterday and ready to go higher, right? So if we look at Friday's trade, we had the gap in the morning, and then we straight trended higher for a couple of hours. And then what do? We basically just went sideways, right? We just rotated, rotated, rotated. Well, that spike, that's the breakout of rotation. That's the market finally deciding we want new momentum to the upside. So if there were buyers ready to create that momentum on Friday, why wouldn't there be again today? So we look for support there. But if it breaks, well, then the narrative changes, right? That breakout is invalidated. And that's when we look to start to pull back and repair the weakness. You can see also the overnight found its support right around the base of that spike. Screwball market was liquidating from Friday low, and it can't retrace it. Liquidating from Friday low. I don't know what that means. You got me, brother. From the high. Yeah, that's just pulling back into the spike. That's just the overnight traders that are looking for the gap, right? Overnight inventory was net long. They opened up here. They were hoping we'd just pull down to yesterday's high and then get continuation and they could go take profits. So as soon as that level broke, all these traders liquidate. But now that we're close to the base of the spike, we have a chance for new traders, stronger hands, buyers, to step in. All right, NQ is breaking below that 20 moving average on the 15-minute candles. That's a little bit bearish to see. It's also probably by now starting to repair those weak references. Okay, so you got a weak reference at 12.040, 12.028, and 1200. So you just monitor for continuation after it repairs the first one. Does that bring in the buyers? If not, it'll repair the second. Does that bring in the buyers? If not, it'll repair the third, and so on. All the way down to the gap at 11,768. Again, we're not there yet on the ES, but the NQ looks bearish. All right, internals are trending lower across the board. That's a little bit bearish. So we've got one tiny little bit of support, the base of this spike, which we're holding right now, and that 20 moving average on the 15-minute candles for the SPX. If these break, we're going down. Maybe even as far as filling the gap left behind on Friday. But we'll, of course, monitor for continuation in case we find support in here. All right, well, we got no support here, so I am bearish and monitoring for continuation lower. The first week reference in need of repair is at 38.95. If we don't get support after repairing that one, the next target is 38.91. If we don't get support after repairing that one, the next target is 38.86. If we don't get support after that one, the next potential support is the halfback at 38.75 from Friday. If that breaks, I think we're going to get a gap fill to the downside, all the way down to 38.06. So, of course, there's plenty of opportunity for support in here, but things are starting to look bearish. Okay, first week reference repaired. Is that enough to bring in the buyers? Let's see. All right, looking for some resistance here around 39.02. Do those ticks get punched back down below the zero line? All right, first resistance. Market's breaking through it. That's a little bit bullish to see. So I will remain bearish as long as we're below the halfback, which is right here at 39.12. If we're able to push back above that, remember there's those low volume nodes in need of backfilling. So that could be the beginning of a push higher, filling those and then creating support and continuing. So I'll be neutral if we pass back through the halfback. And then I will be bullish if we get back above yesterday's high. Otherwise, the assumption is resistance. And continuation lower to repair these weak references. 777 bearish momentum. I don't know that I really call it momentum, but yeah, it is bearish. Kind of feels like two-sided trade though. And the bears just have like a slight edge. It's starting to feel to me like we will find support in here once we repair these weak references. But let's wait and see. Rockingham also noting how pathetic volume on the day was on Friday. No real commitment. Bunch of weak hands traders. That would be a reason to fill the gap, obviously. All right, we must have just had a news release with those bots kicking in. Screwball ticks are not bearish. No, not really. They're starting to get there though. If they keep going this way, they'll be trending. Got to give them a minute. Let that resistance build. Dancing around the zero line. Yeah, you're right, actually. All right, well, the Bulls won that round. Last resistance is the halfback up there at 39.13. If that breaks to the upside, we're likely heading higher here today. And we just needed to repair that first week reference and pull back into our volume. But it's too early to make that call. Got to wait till we break the halfback. Very, very common to get resistance there. All right, pass right back through halfback. No resistance, so I'm neutral once again. And I will get bullish if they get back above yesterday's high. Okay, so we just finished backfilling those low volume nodes. Cortman, can you review the ticks to know when it was time to go long? Well, I didn't go long. But the ticks just told me that the momentum to the downside was over. So for one thing, as Scooball mentioned, it was finding support around the zero line. So that is a sign of new buyers stepping in and then breaking that downtrend. Often if the market's going to continue to trend lower, the ticks will trend as well. So that bearishness is gone. But are we just going to rotate in this range all day? Or can we break out and get some continuation to the upside? That is the next question. Also, at this point, it's worth noting I would see the A period low, kind of like rotation. If we start to pass below that A period low again, we're right back to monitoring for continuation. Repairing the first week reference, does that bring in buyers? If not, second, so on and so forth. If we pass back below the A period low. But we might be in a little bit of a chop zone until we get up above yesterday's high. A little bit of uncertainty. Cajun trader gathering all the longs, then we fall. It's a theory, right? And I know that's how the market normally works. But what's interesting to me was the fact that we got below the overnight low. We repaired that first week reference, and that didn't bring in more selling. Right? The repair instantly brought in buyers. You know, so that in relation with the fact that we spent all day yesterday or all day Friday trading around in this range makes me think this is stronger support than we realize. This was acceptance of higher prices. So your scenario of like this was just just going lower, push back up, look for resistance, go lower like that, very possible. But I'm not really going to get super bearish unless we get back below today's low. So it's the idea of chop versus momentum, right? Chop is uncertainty. The market is grinding around. It's trying to figure out what it wants to do. There's no leadership. Whereas a trend or like momentum is leadership. We don't have the leadership to the downside anymore. They had their chance. So now it's chop and we'll figure out who wins. Buyers or sellers. Oh, how quickly, Scuba. Oh, how quickly the tide turned on those ticks. Do they look bearish now? Lee, the breath is around the zero line. What does that tell you? Nothing. The breadth is basically useless unless there's like a clear trend. When it's just bouncing around the zero line, just avoid it. It's just unnecessary extra data to confuse you. Daniel, the news temporary spiked it, and now we're back to going down again. Could be, but to me, that's a guess. I'll know if I could probably just treat it like this node right here. If we break below that, then I'll know new sellers are piling on. But right now, this is still just chop. Market's just trying to figure out what it wants. Don't you go putting words in market's mouth. It hasn't decided yet. All right, new sellers. Dave, quite a bit of single prints on the NQ from Friday. Yeah, you're talking about down at the bottom. Yes, sir. It's a lot of excess. Looks like you repaired the first 2 week references on the Q. Still one more there in need of repair. Asterisk, when do we switch to the private feed? At 10:30. 15 momentos. Jeremy Jones, that MA is a magnet this AM. I don't know that I think about it as a magnet. Like looking at the Q, the way it like passed below it, came back up, passed above it, came back down. I know what you mean, but that's more of just a sign of like indecision. The reason that happens, the reason that you get like this right here, is because there are bots that buy automatically or sell depending on which direction it's coming in. So if it's coming in from above, they buy to create support. If it's coming up from below, they sell to create resistance. And the chop continues. No one's in charge, not the buyers, not the sellers. Coop, sometimes the EMA will move to your price when you are waiting for price to move to your EMA. I know, it's the worst, isn't it? It happens with the POC too. You'll be a rotational day, you'll be short, waiting for the market to sell off down to the POC, and then they pull it up to right where you are. It's very frustrating. But the nice part about it is it gets you out of your trade without losing any money, because you then recognize something has changed in the market. New information. All right. Well, the chop is starting to build some momentum to the downside. Is it enough to break that A period low? If so, I get bearish once again. Mateus, what is that? Oh, what MA is that? Sorry. What MA is that? That is the 20 moving average on the 15-minute candles. And the reason that I use the SPX and the NDX, this is very, very important, is that they only include the regular trading hours. They don't trade in the overnight. And for some reason, if you use the 20 moving average on the futures and you include the overnight trade, it doesn't work at all. So you have to only have regular trading hours. You can either, if your software allows you to use the futures contract and just eliminate the overnight, that's the best, most accurate one you can get. But the second best is the SPX or the NDX, as they are only trading during the regular trading hours. God damn, the chop continues. Mateus, it's the simple moving average, not the exponential. Screwball, I'm not bullish there until the market goes above the 8-period high. I agree, but I would say above yesterday's high and then find support. We may just be looking at a rotational day here. But if we are going to get a continuation of the trend up, we would do it by getting above yesterday's high and then bringing in new buyers up there. So there could be an opportunity to get long before you get to the high of the day. If we push up, come back down, find some support, that's the buy. But until then, you know what time it is. Chop, 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 chop. So the question you're all wondering, Charles, with the chop going on, can I just take regular rotational trades, meaning targeting the POC? The answer is no, you cannot. Those only work after the signal of cessation of one time framing. Prior to the market beginning to trend one way or another, when it is rotating like this, it is completely unpredictable. There's no way to know where it's going to reverse and go back down or reverse and go back up. So trading the chop-like rotation will not work out statistically for you. It's best to be patient and wait for the market to pick a direction. Okay, if they want to break the low, they should turn this node into resistance now. So somewhere between 39.01 and 39.05. Should get some new sellers and keep these ticks down below the zero line here. If they pass back through this node, then we've just got more chop. Another fake out. Peter, value building in the lower part of the spike, maybe still overnight absorption. Yeah, choppy for now. Current value area low and overnight low. If break short to YPOC, I assume you mean VPOC. Yeah, I can get behind that. You're saying if the overnight low breaks, you target yesterday's VPOC. I think it's only a few points lower, but yep. It's the same trade I'm looking at. I'm just looking at it as a repair of the week reference. So again, I'm putting these question marks around this resistance because I don't know that this resistance will hold, this node will hold. But if it does, that would be bearish to try to go break that A period low. Let's see if the sellers can do it. Oh, yesterday's POC you meant. Oh, okay. It's holding. The resistance is holding. All right, well, with the printing of the C period here, we should get some insights moving forward. If the C period breaks the A period low, that would be bearish because we would begin one time framing lower. And if the C period breaks, I would say yesterday's high, we will look for support up there for continuation higher to see if we can break the A period high. But as long as the C period continues to trade here inside this range, it's just a straight up gamble. So as far as leaving you with some insights moving forward, as I've been saying all morning, break that A period low, look to monitor for continuation lower. Get above the overnight high, come back down and find, yesterday's high, Friday's high, come back down, find some support. look for continuation higher. Otherwise, we're just going to continue to chop around in this range. It's a little bit bullish that value is higher. It's also a little bit bullish that we're building our volume above the area where we built it yesterday. So yeah, man, it's like 50-50. A little bit bullish with value higher and building volume higher. A little bit bearish with all the weakness we left below. So we'll have to see where the C period breaks first. With that, I wish you all a wonderful rest of your day. Happy Monday. And we will see you here tomorrow morning. If you're a member of the brigade, I'll see you on the private stream. Let's ride.